Ideal. Kazakhstan hat es gemacht. Die hätten eines tun. Das wäre
Okay, good afternoon, everybody. Thank you for waiting. You have a statement from Erik, which we put out that's free for use now whenever you'd like to use it. I think it's at 12:30 GMT, but that was my mistake. It's free now. Erik will briefly introduce the subject, which is the crisis and the next steps, and I'll hand over to him for a brief statement, and I'll take your questions. Thank you very much.
Thank you, Tony, and welcome to this press conference. So I think this is a time of definitely great uncertainty in the world and uncertainty in our region. As you know, we came out last week with our forecast, which is probably at the time at least was at the lower end of a forecast. It was pretty much based on a more dire view on the situation in Russia based on the first quarter numbers. As you know, we have now first quarter numbers from several countries. They were pretty much in line with what we had expected. But what is different now is also that for the first time in a long time there are some upside possibilities as well. And so while the negative news is continuing to arrive, there is also for the first time an upside. Having said that, of course, we don't necessarily want to subscribe to this view of a lot of green shoots around. That's not. We should not have any exaggerated expectation that this crisis will go away very quickly. We know from history that financial crises, unlike regular recession, tend to take quite a long time to recover from. So we should have some realism when we look at the signs in the region. At the same time, what is very encouraging is we have not seen any of the traditional emerging market crises, the twin crises of collapsing banking systems and collapsing exchange rates. And I would argue that this is very much a result of the, I would say, rather mature and positive policy response, both in Western Europe and I would argue internationally. In Western Europe, maybe most of so in Western Europe we have seen very importantly broad programs to support the banks that are active in our region, and that's critical because, as you know, these banks are very important for the funding as other sources have dried up. Particularly bond markets and syndicated lending has dried up. These bank funding has, while reduced, it still is very important for the region. We also have seen very strong support, policy response at the international level. We have, maybe most importantly, we have seen that strong statements and to date at least a consistent behavior in the sense of not doing protectionist taking protectionist measures, and particularly what we worried about was protectionist measures when it came to the financial system and the banks. And so these aid packages that I said were so important for the Western banks have not been restricted in their usage in our region. The G20 process has been positive to provide a sort of sense of stability to the region, particularly the reinforcement, the resources to the IMF, the promises of increased capital to development institutions, EU's doubling of its balance of payment support, very important. And I want to emphasize also, I think, what the IFIs have done together in the joint IFI action plan that many of you are familiar with, and the Vienna initiative, trying to put in substantial amounts of capital into the region, but also taking a step forward to promote coordination that was needed to secure continued engagement of the banks. But I also want to emphasize that we are no way out of the woods. We have yet to prepare ourselves for a effect of the downturns, these numbers that we have seen, the effect of this downturn on the banking sectors in the region. So the first shock was the combined shock of a drop in exports and the shut off from international capital markets. Now we also have to brace ourselves for the impact on the banks in the region from the slower economic growth. We also need to think more long-term on how we adjust the corporate sector to this, both to the crisis world but also to the post-crisis world. The need to adjust to more expensive capital, to different risks, and I think there it's a very important role also for EBRD. We knew that the foreign exchange exposures was a very important reason for the vulnerability of many countries in our region. We need to try to address that in different ways. And of course, part of that is building well-functioning local currency markets in the countries that don't have any immediate prospects of joining the euro. I also want to make a plug, if you want, for the need to not forget the long term, the need to use the crisis now to invest in long-term diversification in the countries that are now seeing what it means to be overly dependent on, particularly on commodity exports. But there are also more broadly a sense that maybe some countries have become too exposed to individual industrial sectors as well. So this is, but more broadly, it's also important to build now the human capital that is needed to be competitive in the long run. And maybe on a sort of final note, one thing that we see now, unfortunately, across the region in some countries more than others, is that this private sector crisis is turning into a public sector crisis, and we are seeing a collapse in tax revenues, and I think that's something that we need to be very much prepared for, and what that means in terms of both meeting fiscal gaps in the region, but also making sure that this does not crowd out the private sector in the access to capital. So with those remarks, I'm happy to take your questions.
Yes, please. Could you identify yourselves, please, just for the transcript?
Andrew Walker, BBC. Mr. Berglöf, obviously the performance of Western European economy is terribly important for those that you deal with. I wonder if you've had a chance to digest the new GDP figures that came out this morning, in particular Germany's 3.8% quarter-on-quarter contraction. I wonder if you could reflect on the significance of that, and indeed Western Europe, the importance of Western Europe for the prospects in your region.
Well, they're hard to digest. So I think we knew and we have seen these kind of numbers for some time now. So it's not that we come completely unprepared for them, but I think it is important, as I said before, that the region is very dependent on exports. It's very dependent on the capital that's coming